On Business Incorporated today, Ghana's finance minister presents mid-year budget. Review says coronavirus has exerted seriously on Ghana's economy. South African businesses remain committed to the fast-growing consumer markets of its predominantly black townships despite violent riots. An African Development Bank loans Seychelles $20 million to cover budget gap. Hello and welcome to the program. I'm Chimeze Obi Iwago. First, the intraday market numbers, and here in Africa, the Nigerian market and the JSE in South Africa traded sideways at intraday. While the NGX index was up 0.17%, the JSE index in South Africa was in the red, down 1.22%. The market in Egypt is closed today, but ended Thursday's trading session in red. Kenya was up on Thursday. And markets in the Middle East closed on Friday for the weekend. The last trading day for the week on Thursday, all the markets we track were in the green territory at close. Abu Dhabi was up 1.03%. Dubai inched 0.51%. In Saudi Arabia, the Tadawul index gained 0.72%, while the Qatari market also traded in the green, up 0.42%. In Europe, stocks retreated on Friday morning after closing the previous session at all-time highs as investors reacted to another deluge of corporate earnings and economic data. For more, let's talk to Chelsea. Hello, Chelsea. Good afternoon. Well, lots of data out today. Europe's economy climbed out of recession in the second quarter as gross domestic product rose 2%. That's according to the new data released today. Break down this report for us.
So this read was actually stronger than economists had been expecting, and it shows just how far the European economy has come and how quickly it is recovering from the very severe pandemic blow. Particularly, we saw very strong growth rates from southern European economies, and these were countries that got hit much harder by pandemic lockdowns at the height of the coronavirus outbreak. So Italy, Spain saw growth of almost 3% in this quarter. Portugal saw 5% growth, so that's a pretty good sign. The one disappointment I'd say is Germany's economic growth rate, which came in below expectations. Analysts say that's likely because Germany is really struggling right now with a lot of supply chain problems. We've spoken a lot about the semiconductor shortages that are hitting the auto sector here, but also having difficulty for manufacturers to get things like raw materials, steel, copper, wood. That's all really putting a damper on Germany's export-dependent economy as well. Even though this growth was strong, the European economy hasn't fully yet climbed back to its pre-pandemic size, and many are still very concerned about the Delta variant, what that could do to economic growth and what that could do to consumers.
And Eurozone inflation data was also released today after Germany reported a surge in consumer prices in July a day earlier. How hurt is inflation running in the bloc?
Inflation is running quite hot right now. For the broader Eurozone, we saw inflation rise by about 2.2%. That is lower than the almost 4% we saw in Germany, but it is still above any recent level in recent years, as well as it's also above the ECB's, the European Central Bank's target for 2% inflation. So it is definitely stronger. A large part of that is energy prices. Those were up about 14% from the earlier period, and that's because we've seen energy prices, the prices for things like oil or natural gas, really surge as economies around the world have reopened. If you exclude some of the more volatile measures, energy, also food, the inflation rate is actually quite low. It's still about 0.7% this quarter. It also appears to be slowing. So economists are still looking at this surge in inflation and saying, okay, this is being driven by temporary factors that will fade in the months ahead.
And the battle between Tesla and Volkswagen to be the top European electric vehicle maker continues. New sales figures show Tesla's Model 3 gaining ground. Tell us more.
So yeah, the Tesla Model 3 has really exploded into the European auto market over the past several months. In June, this report from a UK research firm showed that the Tesla Model 3 was actually the second most popular car sold in Europe among all cars, not just electric vehicles. So that's a pretty extraordinary rise for Tesla. Tesla remains the biggest electric vehicle maker in the world. It was really the first to market. It's the most recognized electric vehicle brand, but it does have a lot of competition, including from all of the major European automakers. Volkswagen has really emerged as the front runner in the race to catch up with Tesla. They say they want to be the biggest. They want to unseat Tesla by 2025, but they're still running behind. We also got quarterly results from both companies this week, and it showed that Tesla is still delivering basically twice as many electric vehicles as Volkswagen in the first half of this year. So Tesla does have a lot of competition, but for now it still has that first mover and very recognizable brand advantage over these more traditional automakers who are just now starting to get into this sector.
Kelsey, well, today is the last trading day in the month, so we look forward to a better month. Looking forward to seeing you in the new month. Enjoy the weekend. And in the UK, it's dividend bonanza for shareholders of most listed companies. Let's get the details from Juliana. Hello, Juliana. Good afternoon. Well, UK listed companies have announced a combined 7.2 billion pounds in dividends and share buybacks. That was on Thursday, as the economic rebound and receding COVID fears allowed firms to resume bumper payouts to investors. Big oil and miners dominated the dividend bonanza. Tell us more.
Good afternoon, Chimamanda. You're absolutely right. What a bumper day it is for shareholders who have missed out over the past 18 months. You very rarely get sympathy for shareholders, but they were a victim of COVID-19, as some of the big firms were advised to rein back their spending and make sure they had enough cash in their coffers to keep going, because nobody knew what would be happening in the pandemic. But as you said, lockdown is beginning to ease. People are beginning to travel again, and so today was a payday, and a lot of people got paid a lot of money. You mentioned miners were the big payouts. Anglo American, for example, they paid out over £4 billion to their investors, and that's because they've had an amazing first half of the year. In fact, I believe it's the best half they've had in their 104-year-old history. So that's good news for their shareholders. Also, the likes of Shell, Diageo, and other big firms have paid out. So yes, truly a bumper day at the end of a very tumultuous 6 months.
And of course, NatWest, formerly known as Royal Bank of Scotland, and IAG, British Airways owner, are also reporting today. While NatWest says profits rebounded in the second quarter, IAG is reporting a loss. Talk us through these results.
Yeah, it's been a good day for NatWest, as you said, formerly Royal Bank of Scotland. Even the British government, or the taxpayer, managed to get a bit of a payout from them of £192 million. And that's because they have reported a pretty strong first half of the year results. Operating profit came in at about £2.2 billion, way ahead of analysts' expectations, which was just over £1 billion. And if you compare it to this time last year, they were reporting a £770 million operating loss. This is all due to COVID. Banks were pretty scared about this time last year because, of course, similar to the big firms, the Bank of England stopped banks from dishing out dividends and paying bills, and all had to put aside hundreds of millions, in fact, in some banks, billions of pounds for impairment payments because there are so many government-backed loans that were given out, and there were fears that some of these payments weren't going to be paid back. So they managed to claw back about £770 million from that, and they're doing great. On the other hand, IAG, the parent company of British Airways and Iberia, they haven't had a good second quarter. They've reported losses of hundreds of £millions, pretty similar to what we were discussing with the budget airline Ryanair at the beginning of the week. This is obviously all due to COVID-related restrictions. At the moment, they're only operating 20% of what they would typically operate at this time of the year. That's really crunching down on the numbers. Pretty positive forecast, though. They do say that they're hoping by the end of the summer they would have expanded their capacity to fly at least just 45%. It just goes to show just how the airlines are really reeling because of COVID. They're holding their breath, crossing their fingers, hoping that the Transport Secretary, Grant Shapps, is able to secure a deal with the White House so they can start getting free-flowing flights between that very, very lucrative long-haul flight between New York and London Heathrow. So who knows, but opposite ends of the spectrum for two of them.
So how are the markets digesting these earnings and dividend bonanza, and what should we be looking out for next week?
Yeah, so the FTSE is going to go into the weekend in the red. Red is the theme colour of the day, not just here in London, but also in Asia. Lots of the sentiment and the anxiety from the Beijing crackdown on the big tech titans is really starting to creep into global market sentiment. The FTSE All Share is down 0.79%. The FTSE 100 also down by 0.88%, and down for the FTSE 250 by 0.65%. In the currencies market, the British pound is up on the US dollar by 0.04%. Down, though, on the euro by 0.09%, and up on the Japanese yen by 0.17%. Lots of data. Next week, we're going to be looking at the final PMI data for the month of July. We are starting to see a little bit of a creep down. It's still way above that 50 benchmark. Anything above 50 shows expansion within the private sector. So we're going to be looking at services, manufacturing, and construction. And then all eyes and ears are going to be listening to what Andrew Bailey and the rest of the Monetary Policy Committee have to say on Thursday. Inflation still a topic of discussion amongst central bank governors. At the moment, it's flying high in the UK, about 2.5%. Are they going to start tightening up that monetary policy? We're all going to wait and see. But I think at the moment, Jimmy, the economists and the observers think quantitative easing will remain £895 billion, and interest rates will remain at the historic low of 0.1%.
Quite heavy data, and of course we'll look forward to the Monetary Policy Committee meeting there. Of course, this is the last trading day for the month, and we look forward to a better month. So we can say, thank God it's Friday.
I was waiting for you to say that. Thank God it's Friday.
All right, volatile trading continued for Chinese stocks on Friday as losses were seen again a day after they clawed back some gains following a dive early this week. Hong Kong's Hang Seng Index tumbled more than 2%. By the afternoon, Hong Kong's Hang Seng Index plunged more than 8% in 2 days early this week and bounced back by 3% in Thursday's session. Mainland-listed stocks were also subdued, with the CSI 300 tumbling 1%, Shanghai Composite declining 0.53%, and the Shenzhen component down 0.48%. Japan leads losses in other Asia-Pacific markets. Japan's Nikkei 225 dipped 1.54%, while the Topix lost more than 1%. South Korea's Kospi was down around 1%. The S&P ASX 200 in Australia was just above the flat line. And futures contracts tied to the major U.S. stock indices fell in the overnight session as a soft earnings report from Amazon threatened to dampen an otherwise strong month ahead of July's final day of trading. The week's deluge of earnings reports continued after the closing bell Thursday, with e-commerce giant Amazon and social media platform Pinterest providing profit updates to investors. Equities rallied during Thursday's regular session, even after the Commerce Department said economic growth in the U.S. decelerated somewhat in the second quarter. The tech-heavy Nasdaq Composite underperformed by a 0.1% gain kept in a check by a 4% drop in Facebook shares after the social media company's earnings report. Thursday's positive session came despite a government report that showed U.S. second quarter gross domestic product accelerated 6.5% on an annualized basis, considerably less than the 8.4% Dow Jones estimate. The GDP update wasn't the only economic news Wall Street poured over this week. Many investors were relieved that the Federal Reserve signaled no imminent plans for dialing back asset purchases. And oil prices fell Friday morning, but were on track to post solid gains for the week, with demand growing faster than supply, while vaccinations dampened the impact of a resurgence in coronavirus cases worldwide. Brent crude futures fell 40 cents to $75.65 a barrel, following a 1.75% jump on Thursday. U.S. West Texas Intermediate crude futures fell 38 cents to $73.24 a barrel, whittling down a 1.7% rise from Thursday. Both benchmark contracts were headed for gains of around 2% for the week, buoyed by indications of tight crude supplies and strong demand in the United States, the world's biggest oil consumer. All right, we'll take a break now. When we come back, we'll look at all the developments here on the African continent. To stay with us. In South Africa, the Treasury announced this week it expects a relief package for businesses and individuals affected by this month's deadly riots to cost 38.9 billion rand. The government will spend an additional 31.2 billion rand and grant 5 billion rand in tax breaks, while 2.65 billion rand will be reallocated from within the budget. For these and other developments in South Africa, our correspondent there, Brian Pugeni, joins us now. Hello, Brian. Good afternoon. Good to see you. All right, Brian, the government on Wednesday announced it plans to spend $2.6 billion, that's about 38.9 billion rand, to help spur riot-hit economy. Now, this is a country reeling in debt, although Treasury Director had said the program won't require additional borrowing. Did he also give insight how the government hopes to fund this? Hello, Brian. If you can hear me, please, could you kindly open your audio there? Unmute yourself. All right, while Brian gets himself unmuted, let's look at Ghana. The Finance Minister, Mr. Ken Ofori-Atta, says the COVID-19 pandemic has exerted seriously on the economy, creating job losses and worsening the unemployment problem, particularly among the youth. Mr. Ofori-Atta, while reading the media budget review, said the government had competently managed the COVID-19 situation and made Ghana's economy outperformed its peers and recovering faster. According to him, government is ready with a comprehensive program to tackle these intractable problems. The goal is to create employment opportunities for 1 million of young people over the next 2.5 years. He lauded the reports from the Ghana Statistical Service, which indicated that the overall GDP growth for the first quarter of 2021 was 3.1%, and the growth was even better, excluding oil, at 4.6%. And the African Development Bank has approved a $20 million loan to support the Seychelles government budget. The loan, payable over a period of 17 years with an 8-year grace period, is part of economic reform Seychelles is undertaking with the support of the International Monetary Fund. The chief debt analyst at the Department of Finance, Dick Lambote, says the Seychelles annual budget is currently running at a deficit, which means the country's expenses are more than its revenue. The support from the African Development Bank is expected to be repeated each of the next 3 years. But Lambote says that if the economic situation improves, further loans may not be taken. All right, let's have Brian now. Well, Brian, yes, we were talking about this announcement by the government about the plans to spend about $2.6 billion. Now, they talked about the fact that they're not going to go for any borrowing. So did they also tell the people how they are going to fund this program?
Well, thank you for having me. Government are saying they are going to get the funds within available resources. They're not really saying, they're saying they're not going to borrow the money. So they're saying they're going to tap into the resources they have. And this funding is going to help with those who were affected by the looting and also social relief for COVID-19 victims, people who've been affected by the COVID-19 who have lost their jobs. The 350 Rand relief fund has been reinstated till next March. That's March 2022. And that's part of that money is also going to go to law enforcement agencies, which is the police and the South African Defence Forces, which will help with any future unrest in the country.
Now, a worrisome development in South Africa's vaccination drive is that most South Africans don't want the COVID shot. They claim they rely on prayers. How so? Can you tell us about this? I thought there's a saying says, heaven helps those who help themselves.
Well, it's a really awkward moment and a weird thing for people to say that they rely more on prayer when the vaccine, most people have been trying for the vaccines to be there. Now that the vaccine are out there, people are now saying they rely more on prayer than the vaccine itself. But mostly, I think it goes down to lack of information on the vaccinations themselves. People have had reports of some people dying and some people having extreme after effects of the vaccine jab. And that really has scared the ordinary citizen who does not have a lot of information on the vaccine itself. So those people who do not have clear understanding of how the vaccine works are the ones who are saying they would rather go to church and pray about it and not really take the jab itself.
Prayer is good, but heaven helps those who help themselves. Anyway, a fail and finish agreement between Pfizer and BioVac, a South African company, has its limitations and critics, but is nonetheless a step forward in securing COVID-19 vaccines for the African continent. What are the sound bites you are getting about this?
Well, it's a right step in the right direction for Africa as a whole, having vaccines being locally processed. Those vaccines are not going to be fully manufactured in, will be processed in the country. Like you said, it's a fill and finish, which means that vaccines will be transported this side, packaged in South Africa, then distributed around the continent, which is a good thing because vaccines will be easily accessible to economies of Africa and South Africa and all those places. They're easily accessible to people. We're seeing even here in South Africa, the vaccination drive has taken a further step forward. This past month, we have actually breached the 7 million number of people who've been vaccinated. Though critics are saying the big issue is these big pharmaceuticals are not sharing the technology. They're just giving a finished product and we are just packaging it. So that's the main critique from especially Brothers for Africa. We are saying that they need that know-how to manufacture the vaccines locally in Africa so that we do not depend mainly on the West.
All right, so wrap up the week for us. I mean, this is the last trading or business week for the month. How have the markets performed this week? What companies were on the radar and what is the outlook for next week as we enter a new month?
Well, firstly, the South African rand did strengthen today. It was trading at 14 Rand 57 to the dollar. It's been hovering at 14 Rand 80 from Monday till Wednesday. So it did strengthen today, which is a good thing for the markets. One company we should really look at is Transnet, the railway transit company in South Africa, is a state-owned company which was hacked. It had a cyber attack. So they declared a force majeure, and that really caused a lot of shipment of goods not being shipped from ports into mainland, which really did have a setback on most products in the country. But they're saying that their system is almost 100% back online. And one other mention is ShopRite, who are really helping out in communities which are affected. by the lootings, recent lootings. They've got mobile trucks which are helping out with food, and so that people can get food and services in those areas.
All right, thank you very much, Brian. Enjoy the weekend.
Thank you. Same to you.
Well, still in South Africa, recent unrest there damaged hundreds of businesses, but property developers, retailers, and entrepreneurs say they remain committed to the fast-growing consumer markets of its predominantly black townships. Let's watch this.
When violent riots broke out in South Africa earlier this month, former soccer player Lucky Lekwafi hoped his restaurant in Soweto Township would be spared. He says he's popular in the area and that he was using the fast food establishment, Grotam, to give back to the community. But his hopes were in vain.
They took like everything, including the toilet, the zincs, the water pipes, and the electric wires. They took everything.
His store was one of about 3,000 which were looted during the July riot, which killed 300 people, sparked by former President Jacob Zuma handing himself in to start a 15-month jail term for contempt of court. Despite the losses caused by the recent unrest, property developers and retailers say they remain committed to the fast-growing consumer market of its predominantly black townships, driven by rising consumer spending by the black middle class in areas that were disadvantaged for decades under the white minority rule.
We're definitely going to continue, to invest in the areas. I think strategically, we are very committed to there. I think, we feel that this is where the majority of South Africans live. By bringing malls to them, you add tremendous value to the people's lives. And we can see it, if you can take away the cost of travel for a consumer, it puts a lot of disposable income back into their pockets.
The recent unrest was a major setback, but most are determined to take on such challenges and forge on due to the attractive profit margins still on the offer. Cut.
And that's it on the program for today and, of course, for the week. Thank you for being part of it. I'm Chimezie Obi Iwagu.